Hey, welcome back to another episode of Data Financially Follow. On this installment, we're doing the casino. We're going to be kind of going over a couple different investment companies. We got Roundhill, YieldMax, YieldMoost, Curve, and then we got RexShares right over here to finish it off. So as you know, most of this stuff not really invested in. This is not financial advice. Go talk to your financial advisor or financial professional. This is just strictly educational and for fun. All right, so let's kind of go into it. So in the last one, we saw that it was a good month of May, and actually we did have some green over here. And as I told you, like, listen, go into these derivative type of income. Don't get hung up on the green. We don't know how long it's going to be there for. And truth be told, that's exactly what happened. The one signing star of NVDW over here, bam, red. And then Maggie over here was looking like it was going to pierce into the green, but nope, further into the red. And then Top W, that was in the green, red, bam. And that's just kind of the way that it goes. Looking over at our amortization table over here, we can see that once we had picked up 15,000 more over here, our interest that was ticking down ticked back up. But as you pay down the margin account, the interest goes down too. And then kind of just keeping an eye on what's going to happen over here, because as we get to a spot, it might be another point in our investment strategy where we said, hey, we would buy. But as it looks right now, just carrying it down, probably not going to get there, because we're still looking at a balance by year end of about $1,000. So granted, we're just going to take this month by month, and we just always track the income as it comes in and just see how things go. I'm not invested into YBTC, but just kind of looking at the month of June for it. Dividends stayed relatively simple, consistent, and the income didn't fluctuate a whole lot. NVDW, it looked like it was starting to peak up right over here. We are at 30. I mean, it's been flirting with 40, but in June it just kind of fell. The dividends, relatively pretty consistent. 623 kind of peaked up to 30, and then we got 36. But if we look at the NAV from 40, almost 42, going down to 35. TSLW, we're going to go see them over here starting from 26, going down 25, ending at 23. And the income off of it just kind of, fluctuated. There's, it's 9-cent dividend over here, 18 cents, 26. So it's just kind of all over the board. COIW, pretty consistent with its NAV, just driving all the way down to the bottom as fast as it can. And also right here on the 16th, it had a 4-cent dividend. Pretty much fluctuated all the way as well. PLTW, now we can see its NAV just kind of going down. Palantir, I still think it's a pretty solid company. But if you look at, what's been happening, we started over here at 37 and we're now at 16. It's not been fun, but also we see an 8-cent dividend over here at the same time horizon as TSLW, COIW. But dividends kind of fluctuate, but the NAV is pretty consistent on driving its way all the way to the bottom. Maggie, we can see that it started off at 47, ending on 42. It's pretty much a story, and then pretty much consistent dividends. That's one thing I do like about it. It's you can count on Old Faithful over here, and it's not falling as nearly as hard as some of these other stocks are. HOOW, we're gonna go ahead and we're gonna see that it actually had a real interesting month. Real shocker seeing that 51 cents and then a 57 cents all in the same one, considering not too long ago in the month of May it had 11 cent dividend. And it actually kind of picked up the NAV here towards the end. So if we look at where it was at, 51 ending at 58, still not great, but there was times where this thing was at 22, 22, 22, 22. So it's kind of bouncing all over the board. MSTW, no surprise here that we see a 2-cent payout, but the rest of it not all too great. And this thing's going to head for a reverse split. Mark my words, don't know when, but there's no way that the NAV can continue to fall without them doing something. Once it gets to below $1, they risk SEC coming in and delisting it. So they're going to have to go do something. Common denominator here is once it gets too low, reverse split, here they come. Or they might just go ahead and decide they're going to stop trading ticker altogether, which I'll get to that later on. Top W, this was actually, it rebranded what it was doing at the end of March, and it looked like what they changed with their strategy started to work because we were at 34, now we're at 38, 39, 39, and then June been hard for a lot of these, and then went right back down to 34, right where we started again. And right here we see that we didn't have a whole lot of love for this week. That was just a hard week for this particular investment company. Shifting over to YieldMax, we started this strategy for 2025, ended it, and right now I just kind of continue to watch it to see like, hey, based off projections, and granted no one's got that crystal ball, and then compare it to what actually happened just to kind of see. The ones that have been in there for like the longest was TSLY, because that one started back in 2024. I'm not surprised that it's as deep in the green as it already is, because it already made its house money, so it's just basically continued to pay out on that. But the real shocker here is Murni, that's really kind of picked up its own steam, held its NAV, and then it's starting to like be in its own right. But the rest of them, which I would have said, Ulti and used to be my favorite over here was SMCY. Their fall from grace as hard as it's been. But overall, we ended this portfolio factoring in margin and everything else negative 2.3%. It's at negative 2.65. Looking at the total investment that was put into it, the dividends coming out about 84,000. It's almost to a point where it's like, hey, great, you paid yourself back for all the unrealized mess if we would have stayed in it. But nonetheless, I digress. Going into SMCY, we can see that, the NAV is continuing to fall in this. They're going to go eventually reverse split this one like they've done with their others. And the dividends have kind of fallen in accordance. MSTY, Misty, this one, NAV, falling. It's at 11. They did a reverse last year and brought that NAV all the way back up just for it to fall right back to a reverse split probably this year if it keeps it up, but if not, early next year. AIYY, we can see that it's at just shy of $8. They did their reverse split, bringing it up to 20. This one's probably going to get a reverse split this year. TSLY, currently at 26. Did a reverse split last year, bringing the NAV back up to 40. This probably might have another year or two before it does a split. Just really depends on what happens with the underlying. Murni, now at 18, but you see, this thing has battled. So it did its reverse split starting at 15, and then it's at 18. Man, it actually improved while spitting out the income. Talk about unsung hero over here. But it's climbed up, and we see touch 20, and then it's flying down back to 15, and then it's climbing back up. The volatility on this thing is giving me whiplash. Maro, this one didn't go through a reverse split, but at the rate it's going, probably at the end of this year, if not early next year, they're going to have to do something about it. The NAV is just falling too close down to the ground. Coney, this one had a reverse split, so it's now at 19. It started off at 46. It'll probably be, mid next year before it looks at a reverse split. Just really depends on the underlying. Fiat, which is going to be the inverse fund of Coney, is at 23. It had its reverse split last year, 25. So, I don't want to use stable, but it does fluctuate. We see this thing, is going up, and it was hitting at 30. Now it's at 23. When it's going to go do. At least it's somewhat performing better than the other ones we kind of covered. Ulti, they even changed their investment strategy from less volatile, so lowering the ultimate IV of this portfolio down to adjust for that NAV decay, but it's still not being able to keep in. So when they did the reverse split, it was at 40. We're almost down 50% into this thing. So they might end up having to go change their strategy once more if they have any hopes on trying to stabilize their position. The infamous yield boost. This thing tries to tout over 100% yields on some of its tickers. And that's exactly what I mean. It's called yield boost, not yield minimum. But nonetheless, I digress. It did its reverse split for TSYY, so it was at $3, boosted to 23, and for June, it's kind of stayed there while trying to maintain its distributions level. SMYY, it did not go through a reverse split, and it's stayed pretty consistent at the $7 value. PLYY, we can see that we did shoot around $9 average right over here, and its dividends are starting to decline as the NAV goes down. No surprise. Nvidia's NVYY, we can see that it's just downward trend, that there's a common denominator here, downward trend. Not sure why this one didn't go, but I can guess and surmise that it probably didn't go back up, past 22 or 23, and maybe looking at a 19, just shooting from the hip. But don't expect any kind of growth on this one. HOYY, we can see that the NAV is over here staying in the $5 area, and distributions coming off of it, relatively consistent. COYY, it had its reverse splits. It got up to almost $21, and now it's just shy of 18. So, hey, you did the reverse split, you recovered the NAV, just to keep on driving it back down. XBTY, we can see that it stayed pretty consistent between $5.50 to $6, and the dividends all at the 4-cent range. AMYY, we can see that not a whole lot of deviation here and fluctuations, pretty solid company, and the dividends kind of reflect that. Rex shares. This is going to be a fun one. So as we talk about options when your NAV starts to fall to a certain threshold where the SEC can come in, well, you know what? Case in point, we've talked about the reverse splits. This company decided, hey, they market themselves like this is going to be growth and income. Well, they realize they've done such a bad job at it that they actually stopped trading on a couple of these tickers. COI over here, they just said, hey, we're done trading. So after this date over here, that was the last distribution it had. And by the time it was time for the second one, it was already off the market. Stop trading. MSII, same thing. They're like, we're going to save ourselves the public humiliation of doing a reverse split announcement, especially as we market ourselves off income and growth, and just stop trading on it. Bad idea, guys. We're just going to say we're going to cut our losses. Now, NVII, they went ahead and they're still continuing to do it. The NAV hasn't fallen, that far from grace where they're at that point. We can see that, when we first started checking it out, it was at, $26. It peaked its head over here, almost the 34, 35 area. But, since then it's at 23. Considering how it started at 26, it's now at 23, and there's been all this income in it. Granted, we still don't have that growth they promised, but, you've been getting the income from it. TSII, we can see that it started at 23, it's now at 17. We still don't see that growth they promised, but you're still getting the income from it. What you tend to do with that income, whether or not you're doing a drip strategy, dividend reinvestment, or whether or not you're paying down your margin, or you're living off the income, or you're using the income to invest in more riskier investments, or maybe more stable stuff like SHD for one, or maybe something more in the middle, or BDEs, whatever it may be. You got the income. Don't got the growth, but you got the income. FEPI, we can see that the dividends over here, pretty consistent for the month of June, and the NAV didn't fall all too high. I mean, it came down and came back up, and then it go back down again, and where it started at 48, at 41, hanging in there and hanging on. But with these last three over here, this is more of a diversification because it's a basket. It's a bunch of different underlyings that go into it, opposed to the single stock covered call ETF income strategies. So at AIPI, we see that it started at 48, it's now at 35, and the dividends relatively consistent for the month of June. Then shifting gears into CEPI, we can see that the NAV actually went up slightly from where it started. $33.35 to $33.57. Ooh, 20 cents. But you still got the income. And looking at where it started, when we started tracking it, 47 to 33, still down. And last but not least, going the Curve, which, out of all of these, I do like Curve the best. But, it's had some difficulties, but that's also going to depend on what's going on in the underlying. Everything is really, one is always going to be investment strategy, whether you're doing swaps, covered calls, auto callable notes, whatever it may be. But you also have to factor in what's going on with the underlying. So we're going to talk about KGLD, which is going to be looking more for gold options, right? That gold income, and it's at $28. But we see that when we first started tracking, when it came in, it was at 25. So it's actually appreciated, even though it's had a little bit of a rough year. It was at 35 and now it's going down to 28, but you're still getting the income and it's actually appreciated from where, inception. Now, silver's had a little bit of a tumble. And they actually changed their dividend to reflect the tumble. So, here we are starting at 25, it's at 27. So a small appreciation, quite the fall from grace where we're in January on it. But as it's starting to kind of go through this, they decide, hey, you know what? We're not going to do 75 cents anymore. We're shifting it to 60. Great. If you can't stabilize your NAV, don't pay out a higher dividend, which is going to compromise that net asset valuation. You want to keep that up. You don't want to, bludgeon it to death like Yield Boost likes to do. KQQQ over here, we see that starting at 27 and it's at 29. If you ask me, people over at Rex at Market Income and Growth need to take a page out of Curve's book because they're actually doing it. Starting at 27, we're at 29. Small appreciation, but then you're getting your income off of this at the same time. AMZP, we see we started at 33. It's had a little bit of a tumble down to 26. And, they're not paying nearly as high as they used to. Because, that had a 70 cents. We're at 35. So they're adjusting the dividend downward as well. AAPY, we see we started at 24. It's now at 25. It's had its ups and downs. We see it 22, 21 over here and now bringing it back up. So, continue to just keep on watching it. And during that time, a small appreciation, you still got the income from it. Goop. I love saying this ticker. I don't know why it just tickles me the way it tickles me. I digress. Started at 30, now at 39. We've had appreciation on that, and you've gotten the income from it. Now, it did go up to 44, and it was like, hey, you know what? Here's 60 cents. It went down, and here's 45 cents. Great. We're not doing so great. We dial it back. MSFY. We can see that it's at 17. It started at 26. It's had a little bit of tumble. But, with Microsoft, especially as late, it had quite the rally there. Even on the 2X leverage ETFs on this, they've experienced a significant bump this last couple of weeks. So I expect, and hopefully if it continues, that we'll see that this particular ticker over here will also have a net asset valuation increase come July 14th. And maybe we see an increase in the dividend to reflect that bump. Shifting gears into NFLP, we can see that it's now at 18, which is half of where it started at 36. So not doing all too great. And, the dividends have kind of fallen in accordance with that NAV. TSLP, we see it's at 18. It started at 29, not doing all too great. But overall, we've covered several of their securities, and if only a small, handful out of the bunch aren't really appreciating and paying it out, overall, that's why I like them the best. I think they're doing a better job out of the bunch, and I'll continue to kind of watch it. If you like what you heard, you hit that subscribe button, hit that like button, leave me a comment if you want me to see me go over anything in particular or answer any questions. I am here to help. As always, this is not financial advice. Though I'm a financial professional, you need to talk to your own financial professional about the individual circumstances relating to your situation. This is for fun and educational purposes only. Thank you and have a great day.